These are 15 of the best US stocks right now for 2025. They've beat the market and combined brought in more than $5.3 trillion this year. In this video, we're covering all of them from the smallest to the biggest moneymakers to save the best until the end, starting with number 15, Chevron. Chevron is the $276 billion integrated oil giant that today is trading in between its 52-week high and low. Chevron is owned by 4 super investors, and the largest of whom is Warren Buffett, where it makes up 6.5% of his US listed portfolio. Amazingly, until just this last quarter, Buffett had bought or sold Chevron shares for 15 quarters straight. Historically, Chevron's both beat the market and been a dividend aristocrat, consistently growing their dividends over time. Right now, with Chevron's stock price down in the past year, their valuations trade more in line with what they've historically been for the business. They're about $12 below their median price to sales and priced well below their projected free cash flows. Their GF value comes in at $161 per share, which is up $14 from their stock price, or an increase of about 9% from today's levels. We're looking at America's top moneymakers. Most of these businesses are deeply entrenched, well-established, and have moats. With the huge amount of money they're bringing in, they may be interesting companies to look at. Plus, there are some key themes on our list that are going to stand out to you and may surprise you. Keep in mind though, this video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now let's keep looking at our list. Next we have Cardinal Health, one of the leading pharmaceutical wholesalers in the United States. They have a $28.5 billion market cap and their trade just $9 below their 52-week low. Today, Cardinal Health is owned by 2 super investors with just a small 2% position from Harry Byrne. From the 1980s until the early 2000s, this was one of the top performing stocks in the market. Yet today, it looks like the company's stock is trading out ahead of some of these fundamentals. That's reflected in their GF value, which comes in at $103 per share, or about a $12.12 downside. At number 13, we have Cigna, one of the country's largest pharmacy benefit management and health insurance companies. Right now, Cigna has a $78 billion market cap and it's trading at its 52-week low after a major skid recently. Cigna today is owned by 4 super investors. This is led by Leon Cooperman, who has a 3.5% position. Chris Davis, who's on the Berkshire Hathaway board of directors, also has a 2.8% holding. This is another long-term compounder and a company that really took off since the global financial crisis. Even with recent drawbacks, they're up more than 15 times since then. Right now, it looks like Cigna trades pretty attractively compared to their fundamentals and their valuations. They're at nearly half of their projected free cash flows and well below their historical median price to sales. With that recent major nosedive in their stock price, their GF value comes in 36% higher at $416 per share. That's a huge gap, and this indicates this is a company to look into farther to see if that nosedive was warranted or not. Next, at number 12, we have an old reliable in Microsoft. Today, the tech giant is the second largest company in the world with a $3.33 trillion market cap. They trade just $16 below their 52-week and all-time highs. Microsoft is the single most owned super investor stock, with 32 of them holding it in their portfolios. No surprise, this is led by the Bill and Melinda Gates Foundation Trust with 27.6% of their holdings in the company. Not only is Microsoft one of the top performing stocks of all time, they're also one of the top performing stocks of this past decade. However, today it looks like the company is trading well out ahead of its fundamentals. This is a wonderful business, but it still looks like it's being given a ton of credit. But that's not to say that things may not keep climbing higher. Their GF value comes in at $424 per share. Number 11 on our list is Costco. The membership warehouse retailer has a $439 billion market cap and it's trading at its 52-week highs. This was the late great Charlie Munger's favorite business on earth. In addition to the Munger family's personal holdings, 7 other super investors own Costco stock today. Though these are just small positions, and this is led by Chris Bloomstrand. Costco's yet another stock that's gone soaring in the past decade. And while it's a quality favorite, it's trading at nearly 2 times its historical price to sales and way above their free cash flows or their earnings. Their GF value reflects this as well, coming in at $636 per share with a 55% downside. This is also accompanied by a significantly overvalued warning. Now, cracking the top 10 at number 10, we have Cencora, another one of these pharmaceutical wholesalers in the United States. This is a $45 billion healthcare giant, down just $20 from their all-time highs. Right now, there are no super investors who own this business. That may be in part because they're trading out ahead of their fundamentals with their cash flows, earnings, or even sales multiples. Still, their GF value comes in at $221 per share, and it looks like the company's roughly valued fairly. At number 9, we have McKesson, the final pharmaceutical wholesaler in the United States. This makes up the big three along with Cencora and Cardinal Health, which count for nearly 90% of the US market. McKesson's the largest, and it has a $73 billion market cap. Today, it's down $60 from its 52-week high. Right now, there are no super investors in this business, although Stephen Mandel and Viking Global Investors both sold out in the last quarter. McKesson's fundamentals look very similar to the other pharmaceutical wholesalers we've looked at. Compared to past valuations, it looks like they're trading out ahead of these. Yet still, their GF value comes in at $544 per share, and that's roughly around their stock price. Then at number 8, we have Alphabet, the parent company of Google. This big tech giant has a $2.33 trillion market cap, and it's trading at its 52-week and all-time highs. Alphabet is the second most owned super investor stock, with 31 of them having this in their portfolio. Li Lu, aka the Chinese Warren Buffett, and Altorock Partners both have double-digit percentages of their US-listed assets invested in the stock. But this is a small percentage of Li Lu's overall portfolio. Of their big tech peers, Alphabet's valuations seem somewhat more reasonable. They're below their earnings, but they still are ahead of their sales and their free cash flows. Still today, their GF value comes in at $167.50 per share, down $30 from their current stock price. ExxonMobil is stock number 7, and it's the largest energy company in the United States. Right now, it has a $487 billion market cap, and it trades $13 below its 52-week highs. Exxon is owned in the portfolios of 6 super investors, and this is led by First Eagle Investment Management with 3.2% of their holdings in the company. Like its peer Chevron, with a pullback in 2024, its valuations seem more reasonable. They're trading pretty close to some of their fundamentals, and they're priced well below their projected free cash flows. Still, analysts are pricing in a downturn in the cyclical oil and gas business, and this is why their GF value comes in at $97 per share, or down $10 from their current stock price. Stock number 6 is CVS Health, which is a pharmaceutical retailer that's done a lot to diversify their health services in the past handful of years through major acquisitions. They also now are one of the largest pharmacy benefit managers and health insurers in the United States. CVS Health has a $62 billion market cap, and today it's at its 52-week low. 9 super investors own this company, and it was one of the most purchased stocks by super investors in 2024. With a big decline in the company's stock price recently, they may trade cheaply compared to their historical sales and their projected free cash flow numbers. Things really have fallen off a cliff for their stock price in 2024, and this is why a GF value comes in at 50% higher than today's current stock price. Next, getting into our top 5, we have United Healthcare Group. The $479 billion business is the largest health insurer in the United States. Today, it's trading near the middle of its 52-week range. 16 different super investors own this company, and this is led by David Rolfe and the Sequoia Fund, with more than 6% of their portfolios invested each. Their stock price is up more than 20 times from their Great Recession lows on the back of major mergers and acquisitions in those years. Compared with its fundamentals, this company looks split on where it trades. Today, their GF value comes in at $622 per share, which is down 23% from their current stock price. Stock number 4 is the biggest company in the world, Apple. With it trading at its 52-week highs, it has a $3.75 trillion market cap. This is insane, as its largest super investor owner, Warren Buffett, has been selling a lot of the stock in 2024. From when he announced those sales at Berkshire's annual meeting back in May, its stock price is up more than $70. Today, he's still the biggest super investor owner by far, and 20 super investors own this company overall. Apple is perhaps the best performing stock in the market's history, and since the pandemic, it's reached new heights. Their valuations seem like they've really gotten ahead of themselves, as Apple trades far beyond its fundamentals. Their GF value today comes in at $190 per share, which is just a bit higher from where Buffett announced he was first selling the business. Apple's a great segue into stock number 3, which happens to be Berkshire Hathaway. Today, Berkshire B shares are down $15 from their record highs, and they're a $980 billion market cap. Besides Buffett, of course, 19 super investors own this company, and this is led by Guy Spear and the Bill and Melinda Gates Foundation Trust. With Berkshire's A shares included, a handful of them have double-digit percentages of Berkshire in their portfolios. Berkshire has a lot of diverse businesses, and as such, it's hard to look at the company with a combined view. Even though they trade for less than their Graham number, they're above their historical price to sales or free cash flows, and Buffett in 2024 wasn't buying back many of their shares. Changes in the price of Berkshire stock holdings show up in their earnings. This makes their GF value less useful or predictable for the company. Because of this, even though it comes in at $368 per share and that's down quite a bit from their stock price, that's not really indicative of much. Stock number 2 is our final big tech giant. This is Amazon, the $2.4 trillion e-commerce retailer and cloud computing giant. Today, Amazon, which trades under ticker symbol AMZN, is at its 52-week and all-time highs. Amazon's the 4th most owned super investor stock, with 25 of them having this in their portfolios. 4 different super investors led by Josh Tarasoff have double-digit percentages in Amazon. Until recently, Amazon was actually trading below some of their price-to-sales multiples. But in the last half of 2024, their stock price came roaring back, climbing by more than 45%. With that huge increase, their GF value only comes in at $163 today, which is down $60 from their current stock price. Now, are you ready for the number 1 stock on our list? This is America's largest retailer. It's Walmart, trading under ticker symbol WMT. The $757 billion retail giant trades at its 52-week and all-time highs, which aren't reflected well here because of a stock split at the beginning of 2024. Walmart's owned by 3 super investors today, led by the Bill and Melinda Gates Foundation Trust. It was once a large stock holding for Warren Buffett before he sold out of it entirely in the end of 2018. This is another company whose stock price has really gone sky high since the pandemic. Right now, the company's multiples are priced way beyond fundamental valuations for the business. That's why a GF value comes in only at $57 per share, down 65% from their current stock price, which would fit the longer-term trend of this business. Let me know if you want to see a future video on any of these businesses. The amount of healthcare and retail companies on this list was a major surprise. If you enjoyed the video and want to support the channel for free, click the first link in the description. This will take you to Global Values affiliate Interactive Brokers. Thanks for watching and have a great day.